Welcome back, traders. Watching another ICT lecture today from his Storytellers series. It's on the same date as the last video, June 5th, but we'll be reviewing NASDAQ instead of Forex. So let's get started, and of course, the original video is linked in the description.
So obviously, I'll counsel you to look at yesterday's June 4th, 2025 Storytellers edition on this YouTube channel. And you'll see the levels I have here. The smaller ones, the things I'm going to draw your attention to here, will be obviously meant as we go through this short little review and video. But all these details over here, this is all stuff that was included in yesterday's discussion. And then on the daily chart, we were looking at an old inefficiency or daily SIBI. And I told you I had it graded where the upper level, upper quadrant, consequent encroachment, lower quadrant, and the low of that daily SIBI. One of the things that non-farm payroll week really gives us a challenge with sometimes is leading up to the actual event on Friday morning at 8:30 Eastern time, where they release the employment data. One of the major reasons why I tell students to try to avoid trading this particular week after Wednesday London session, going into Wednesday New York session, you want to be basically done all of your trading by 7 a.m. Eastern time. In my opinion, for a new trader, it's going to be advantageous for you if you did something like that. But a lot of you don't want to listen, and you want to just go in here and discover for yourself that FAFO really is something that you should have been more aware of. So because it can be consolidated, because it can be range bound, whenever we have a higher time frame inefficiency, it's most likely going to use that higher time frame inefficiency as the easiest form of real, listen to this, okay? Real support and resistance, not some contrived idea that, well, this is the right high or this is the right low because, I just feel like it's the right one to draw from. No, okay? Having a level of understanding where inefficiencies are is hugely advantageous. And I'm going to show you today, what that means.
So real quick, I'm looking at this and, each individual candle looks kind of choppy. Maybe it would have been cleaner on a 5-minute chart, but we're going to have to look at the overall picture. So when price was above the SIBI here and going down, we're wanting initially to look for some signs of inversion. However, there was no respect at consequent encroachment, and we dropped pretty fast for the sell side liquidity. Then coming back up, we do see respect at consequent encroachment. So this tells me that this is going to be used as a reclaimed fair value gap, and any displacement lower could be used for a short. And we will aim for these inefficiencies below the daily SIBI. Also, you can see respect again at the 25% level. Of course, all of this is in hindsight. I'm sure you've already noticed everything I just said. So let's just go ahead and continue and hear what ICT has to say.
I'm only going to go right into the 1-minute chart as you see here because all the detail is in the 1-minute chart. I don't need to go into any other time frame. I did not do any new week opening gap utilization today. I did not use any opening range gaps. I did not use any first presented fair value gap. I did not use any of those things today. Not one thing like that at all. I just simply used the inefficiencies that were mentioned yesterday and the one that's on the daily chart. Okay, and you can see these levels here: daily SIBI high, consequent encroachment, and this daily SIBI low. This line here is just the sell side liquidity pool. Before I move this slide, rewind it again, you'll see it. Inefficiency from yesterday on Wednesday, and the same thing here. Okay, so these are previous days inefficiencies. So if we're going to sell off and go outside the low of the daily SIBI, then we have to have an understanding where it could go. And the easiest one is use what was the day before. Very simple. That's not complicated, is it? So I want you to take a look at what I did on X this morning. I was trading London session, and I shorted near the high of the London session and banked on a obvious draw on liquidity. I could have held for lower, but I was content with what I showed. And I tried to get some sleep, but I got an unction that I just wanted to just really tear it up today. So I was not able to actually go to sleep. I formulated a game plan on how I was going to use the daily SIBI here. So when we had 8:30 employment data, not non-farm payroll, but it used, look at the bodies, it's using the lower quadrant of that daily SIBI. And then it rallied up, came right back down in, inversion fair value gap, hits it here, rallies up, takes the daily SIBI high out. The bodies stay inside of it. Meaning what? It's probably going to go up there one more time. Why? Because we're already long-term bullish anyway. So that it didn't leave a close or any body portion up there. It just wicked up there. And then this is bait. look for shorts, and retail is going to want to short and hold it forever. Now I can go in there and I'll wait for an order block. Up close candle. I'm giving you this rough idea here because I want you to go into your 1 minute chart and flesh it out. But this up close candle here is a bearish order block, and when it went up in that's a sell, a short, and aiming for the liquidity resting below here. And then the market went back and forth in here. I tried to see what type of a long that could be formed in here, and then it came back down against me and stopped me out a little bit premature before the run up in here. Building another interesting going along to take out this high. You can see how they use the daily SIBI, consequent encroachment, consolidated around the upper quadrant back into a bullish fair value gap. Look at the bodies here. Then it rallies up into daily SIBI high and then rips through it. And it spent a whole lot of time in here. And this is characteristic of non-farm payroll week on Wednesdays and Thursdays. It can be very just annoying. Okay, that's really the best word I can use for it. Looking to get short in here and trying to actually get the actual high or the swing high in here, it can be frustrating. And it can force you out of the trade or stop you out. And then you'd have to look for another short entry if you're going to be trying to trade the extreme outside of daily SIBI. Now you may be asking, why would you want to do that if you're primarily bullish? Because we're leaving this inefficiency on the day before non-farm payroll. So the real event is tomorrow. So this is just them setting the stage and getting people trapped. Buying a breakout above here, that's what this is. Okay, so fading that idea and then an inversion fair value gap here, building a short into that, then a sell side imbalance, buy side efficiency, standard classic ICT bearish fair value gap, trades up into that with a small little rally above that, stop hunt. Breaks lower, comes back up in, easy fair value gap to sell short in there. Rips lower below these relative equal lows, down to the daily SIBI low. So it rallies back up into half of the daily SIBI. So consequent encroachment, building in shorts, building in shorts, building in shorts, breaks lower, fair value gap in there as well. Breaks lower, fair value gap there, rips lower, takes out the sell side there and below the previous day's relative equal lows. And again, look at your Wednesday's trading in the slide before this one here. You'll see that that is the obvious sell side liquidity pool. It was easy. And then below that was the inefficiency I showed you yesterday. Then it rallies back up to the lower quadrant. Okay. Look at the utilization of these levels. Consequent encroachment, lower quadrant. Breaks below it, comes back up in here. Another shorting opportunity there. Breaks aggressively lower down into inefficiencies from Wednesday. Then rallies back up in. And my interest on it at that time was abated, and I wasn't no longer interested. But it did offer new opportunities back inside the inefficiency here. Trades up into it there, breaks lower, rallies back up into it, trades below it, upper quadrant, breaks lower, consequent encroachment, and then trades lower here and leaves these relative equal lows and at the close of the day. And then they open it way down here and then right back up to the low of the inefficiency here and closing in that new day opening gap. So I want you to study this, okay? And I shared a chart with price swings annotated where buying and selling, utilizing the things I teach, how that was not requiring all the things that I talk about. It was just simply one thing, the daily SIBI. The daily SIBI within the context of a week or condition that is prone to be consolidating.
Okay, so he actually had a good amount to say on narrative, so I'll highlight the points again if you missed it. First, pay attention to the economic calendar because that's your market schedule. It'll tell you on which days we're likely to see the real move, meaning the move that aligns with the higher time frame bias, and the days leading up to it are more likely to have fake moves, meaning against the higher time frame bias. Secondly, this consolidation up here at these highs is indicative of a turtle soup accumulation. You see these equal highs here are designed to trap breakout traders. When we break out, traders will be going long, thinking we're going to go up higher, but we're just accumulating shorts up here. So eventually, this is going to look like a bull flag to them and they'll eventually get caught offside. And a similar narrative can be applied down here. Support is broken, we gap down, retail traders will be looking to short the next day. Remember, retail traders chase price. But looking at the next day, we see price rallied all the way up pre-market and then at 8:30 NFP, a big move up. Any retail traders gambling on NFP looking for shorts got destroyed. So anyways, this lecture was pretty short, pretty good. It actually told a story, unlike the first couple of episodes. So I hope ICT does more stuff like this in the future. If you liked it as well, give this video a like and subscribe for more lectures. And until next time, traders, safe trading.